Hello everybody, this is Brandon with Crypto Trades and Tech. Thanks for joining me for another video. Wanted to do a quick video and just reflect on our journey so far in trading crypto this year and developing. And one of the things I wanted to highlight at first was I put this tweet out here back on late September 30th. I was looking for a potential further downside on Bitcoin because I thought we might be seeing a second complementary pattern to what we had seen over the summer with the accumulation pattern. But obviously that ended up playing out, and I know I got messages from a few people that they got kind of shaken by this, thinking that this was probably going to come and we were headed for lower prices. But really what I want to do in highlighting this is to discuss why I keep a trading log. And I reflect on all of my losing trades. I try to really think through what was I being impulsive with that trade? Did I not let the setup come to me? Was I not patient? And normally it's probably because I'm not patient a lot of times. And so the same thing is true of anything I put out in public. Collectively, we've done a lot of great work to get to this point. And so I just want to be reflective of anything that when I put out something that either steers other people wrong or causes myself to be in the wrong frame of mind with my trading, I want to think about what we did there. Now, not long before that trade, you see back on September 15th, in the middle of the month, I was looking at, after we had that big correction and sell-off, I tweeted this. I noticed that the 120-day SMA just started to turn upward. It's very good. And I said, and I was waiting for, this is what I was lining up for a very long time, the last touch of the 120-day SMA before blast off. I said, should we get a retest of the 120-day SMA, it will be the best buying opportunity of the entire Bitcoin bull market cycle. In my opinion, not financial advice. Obviously, nothing here is financial advice. I'm not a licensed financial advisor. But I had that plan, and you see what the result was. We touched exactly that 120-day SMA twice, and then it was pure blast off from there. So had I stuck to my guns and not gone looking for something, now in all the Wyckoff patterns I put out, all the tweets I put out about those, I said in all those, I'm not a Wyckoff expert. I'm just sharing my observation. And I should have known that myself, right? I'm not a Wyckoff expert. I'm putting up my observation. I hope others got that as well, that this was just an observation. This was the game plan, to buy with everything we had coming into the 120 for blast off. Now, this isn't, say, a losing trade for me, right? This was, I bought on the first touch. I'll share what I did personally. I bought on the first touch of the 120 here. And then when price started to roll over and we had all the fears about China, and when I started researching Tether and their association with Hong Kong and what that might mean, and if Hong Kong, started researching the pressures that Hong Kong might put on Bitfinex and Tethers and others that were still associated with Hong Kong, what that might do to the crypto market. And that's what got me thinking that pattern I was already looking at might be more likely to play out through some more additional FUD. So I myself did what I thought was the responsible thing, and I closed out most of my leverage because at this point the leverage was slightly in profit, more or less break even. But what I didn't want to happen was to be irresponsible on this second test of support, not 100% certain if it was going to hold on the second time. And now ultimately the reason I did that, the reason I closed out on that second touch of the 120 was buying leverage coming into the 120 days against my normal rules. The 120 day is my spot level. So if I have dry powder, I will buy coming into the 120 test spot, and then I will sell if we roll over, knowing quickly where I'm wrong. My leverage level is actually the 50-day SMA. And that was the entry I ended up having to take right here. So I had to re-put back on my leverage position here at 48,000 instead of having a position at 41,000. That was the net result for me. So at the end of the day, it wasn't a losing trade or a large loss, but it was loss opportunity. I had an open trade here that I ended up closing probably on the 26th, and then it ended up blasting off on the 1st of October. So in reflecting on that, what I want to highlight yet again is all traders make mistakes of different types. And I want to share this one really wise tweet that BigCheds tweeted out, I think from his book. And it says here, if you spend time obsessing over old losses, you have a high probability of generating new ones. One mistake I see a lot of people making, that I myself have made many times, is after a big loss thinking you have to make that money back in the same play. This is a bad idea, as you do not have a good feel for the trade and are likely to repeat the same mistakes that cost you money in the first place. More times than not, it's better to move on to something fresh without all the baggage that comes with double dipping into a failed play. Every new trade offers you the opportunity to apply your skills and turn them into profit, but if you are still licking your wounds from the last play, odds are stacked against you. So with those wise words in mind, what we're going to do is we're going to put those mistakes in the past, and we're going to march forward with a new game plan. So again, my new game plan was to take this breakout of the first breakout above the 50-day, which we did, and also we took a breakout of the trend line that we've been watching, the breakout trend line for the next wave of the Bitcoin bull market run. Now I'm going to start here with a fresh chart and try to map out another set of strategies for myself. Now we're back above the 50-day moving average, which is what I would consider my more aggressive trades. I always take when the 50 is above the 120 and price is above both of them. Then I'm more aggressive, because then that confirms to me that the bulls have strong momentum on their side, that the bulls have the momentum. So I'm going to flip to my 12-hour chart, because that's where I'm looking for fresh entries. You can see here the swing high that we had right around 53,000. We had a quick almost retest of that level, not quite there yet. That might be the first place to look for a bounce. Now what we do is, typically in a sell-off, when you do get a sell-off, what we'll do is we'll draw a downtrend trend line on that sell-off level. Let me go to the 12-hour and find an example of this. This was one here, obviously. This is another one here. It was a great one. I'm just going to use this as an example. And then here was another one. And what we're doing is we're looking for the bounce out of that level. And oftentimes, what you'll get is you'll get a bounce, a retest, a resumption, and then you'll kind of confirm a horizontal support, and then you get another retest, resumption potentially. But you see here this down structure here, a little bit of a sell-off, breakout, retest, resumption. We're not likely to put in a large pattern like that. Likely our next couple of patterns are going to be things like bull pennants and bull flags. So we're going to be looking for those moving forward and taking structured trades around bull pennants, bull flags, and other related market structure. Ideally, because of the amount of time we spent below the 50 here, ideally, hopefully we'll get one more sell-off and quick touch the 50 and then bounce. That would be the ideal play, also to add one more position on. Let me go back in time here. Let's go to 2017 just for a little history. Now notice when I switch from the daily to the 12-hour time frame on my chart, just FYI, the moving average is still the daily moving average. Let me just show you briefly. What I do is I set the indicator time frame to 1 day, so that no matter what, if I'm on the 4-hour, the 8-hour, 12-hour, or daily, my lines are still just the 50 and the 120-day SMAs, which are my two main moving averages that I use over and over and over again. Those are the ones I rely on by far the most. Now, you see the final touch of the 50. It was below the 50 in September. We had one final touch of the 50 on the 5th of October, Uptober we'll call it, Shocktober 2017, and then price just took off. And the next time we had a touch of the 50-day SMA was actually in early November. So now I don't know if we're going to get that exact same type of pattern where we just leave the 50 and lift off from it and maybe get a quick touch of it before we enter the final parabolic phase. But this might be potentially a level to lean into. Now, the price action that we're seeing coming out the end of October, if you were, that would be like Bitcoin was at $4,300 then, and we're talking about $40,000 now. So this touch right here was $5,500. That might be like Bitcoin coming back to $55,000 very briefly after maybe hitting $65,000 or up to $80,000 of that top wick. So if we just take all these numbers just simply, right, September was basically 4,000, and then we saw a lift off in October from 4,000 to 6,000. So basically, if we just multiply those numbers times 10, we saw a low in September of this cycle of 38, the 10x that roughly, 38,000, 39,000. And then we're seeing price quickly go from 40,000 to the mid 50s, just like we did here early October. We saw it go from 4,000 to 5,700 or nearly $6,000. So you can see here this big liftoff we had. We had a quick sell-off there. That was probably our last 30% sell-off. Let me double check that before final real liftoff from that wick. 30% exactly. So that's the next play I'll be looking for as well. You can see here though, again, this is another great example of the pattern I'm talking about. If I go to the 12-hour, you're going to see a lot more bull flags. The pattern that develops after you get the liftoff out of this wave in Shocktober, we'll call it, you get a lot of these quick bull flag patterns, a quick down and then a resumption out. So those are maybe places that gives you a structured trade. You know quickly where you're wrong below that level, and a breakout of there is another potential place. So I'll be looking for those patterns to set up, and this is on 12-hour. Sure, if we went down to a 4-hour, we'd see these patterns a little more clearly. But the other opportunity is if we do touch the 50. Just like I called out, if we touch the 120, that might be the best opportunity. The other thing that I'm going to just show you this, the other thing I was looking at carefully, you know, in last bull market cycle, we touched the 120 quickly in September and then bounced strongly out of there. I was looking for something similar to that. When we came back into it, that's what gave me really my hesitation, because that didn't exactly happen last cycle. But as we know, things this cycle are so different than last cycle in a lot of ways, and very similar in many other ways. So I think it's just different enough to throw a lot of us who are really in tune with what's going on off our game just a little bit. But the good news is, you know, using last September and October as kind of a general template for the type of price action we might see unfold over this quarter, you can see that while October did have a big liftoff, there was still market structure that you could place additional buys off of. And then you did have, if you were very patient and waited for these retests and these big sell-offs, you had one or two final opportunities to get in, but that required a lot of patience. So that's the plan moving forward. We now know Bitcoin is in full liftoff mode. I'm not certain if the peak comes in 2021 or early 2022. Just to take a quick look at my overall model, all I've done is I've taken the time from the halving to the peak of the 2013 cycle and the time from the halving to the peak of the 2017 cycle. And I've marked the same time to peak on what would be the equivalent of this cycle. You can see here that when we came in from the time of halving to the peak in 2013, that's where we had our big sell-off. And then we had a sell-off a little bit ahead of the same time as halving to peak of 2017. And we're approaching that date of late October. And then, so if we take the delta, the difference between the number of days between the peak of 2013 and the peak of 2017, and add that number of days, you get a potential peak all the way out in late March. Now, all I've done is fitted this uptrend channel, and I've really anchored it now in these two bottom points that we have here. And you can see how the midpoint does cut through a lot of significant price action, with, of course, our peak over here actually in the February and March peaks as the peak of the channel. And if we were to get a top price touch in late this year, that would be somewhere around 250,000, and then that March timeframe would put us out at almost $400,000. If we were to get price action that came all the way up, took this center line, and then kept going until we hit the peak of this uptrend channel on the log chart. So that's a short way of saying, if now that we know we're in pretty much full liftoff mode here, the next few dip buy opportunities, should they come, will be some of the best opportunities. This one that we just had at 40,000 is going to be the best of the entire market cycle, just because of the price appreciation in theory that we should see ahead of us from that point. But besides that purchase, the next couple of best purchases, and probably the safer purchases, because we now know that we are in liftoff, will be the sell-offs that come after this back to support levels. So thanks everybody for watching. Thanks so much for the support. I hope the information I share is useful. And again, I want us all to continue to learn and develop together as we try to conquer the markets together. Thank you everybody. Take care.